When I show you how simple this is right now, you're gonna say, Mike, are you trying to scam me? I'm not trying to scam you. It's just really that easy. Now, I'm really short on time, but I wanna quickly walk you through the final version of the form. We're just gonna look at people who have a situation where they've taken a coronavirus hardship distribution in 2020, and they reported 1/3 on their tax return back in 2020. Now you're looking to report another 1/3 on your tax return for 2021. And have you made repayments? Don't worry, I have not forgotten about you. We're going to cover what you do with those and how you treat that later in the video. And as with all my tax videos I produce on this channel, please know they are for educational and entertainment purposes only. I'm happy to answer general questions about how this stuff works in the comment section, but please know I cannot address specific questions related to your specific tax return and how you fill out your specific tax forms. In the example we're going to be looking at today, the taxpayer took out a coronavirus hardship distribution in 2020 of $90,000. What is 1/3 of $90,000? 30,000, right? You guys know that math. So this taxpayer wanted to spread out the tax on that 90,000, not all in 2020, but over a 3-year period, which is what I find most people are doing, or most people have chosen to do. So here we go. So the first part of the form, it hasn't really changed much from the draft, but you can see in this first part right here on screen, and row A and B, it says tax year for which you're filing this form. So 2021, and then on row B, it says calendar year in which disaster occurred. So the disaster we're specifically talking about, of course, is the coronavirus distribution, which only occurred and only was allowed in 2020. So that's why that box is checked. It says on line D, it says if your disaster is the coronavirus, check this box, so which it is, and don't list the coronavirus item in item C. So that's why row C up here is blank. So all we have to do is come down right to this chart, and I've highlighted the, it's like, what a roadmap, you know, you can go cross-eyed looking at this. But if you just look at this first chart on the left, it says, did you claim the coronavirus related distribution on 2020 form 8915E? And if you're here, yes, you probably did. And so then you go down in item A above, did you check the box for tax year 2021 or 2022? And you check the box for 2021, right? Because that's the year that you're filing right now. And next it says, did you check the box on line 9 or 17 on 2020 form 8915E? And if you check no, then it says complete lines 12 through 15 or lines 23 through 26 as applicable. So what that really means is, this is the only kind of tricky part, is you just need to remember what kind of account did you take that distribution from? Was it a pension? Was it a 401k? Was it an IRA? That's something you need to start with first. And if you don't remember, look back at how you filed your form on your 8915E back in 2020 to remind you of what account that money came out of. So now we're just going to flip to the second page of this. And now the second page of this form is completely blank. You know why? Because this page really deals with disasters that are specifically related to 2021 and other items, which is not the coronavirus hardship distribution. Now, like I said, you're welcome to read all through all this. I'm not going to go through these details because we're only looking at specific examples for sake of time. But you can basically jump right down to page 3 if this is your situation. And notice up atop of this form, it says part 2, qualified disaster distributions from retirement plans other than IRAs. Okay, so if you took the money out of something other than an IRA, so like a 401k, a pension, or something like that, then the part 2 is where you want to fill your information out. If, however, you took the money out of an IRA, whether it's a Roth, Simple, or SEP, then you're going to go down to part 3 instead, okay? So non-IRA, you want to do part 2. If you took the money out from an IRA, you're going to jump down to part 3 and look and basically do the same information, but down in that area. If you had no other disaster distributions in 2021, besides this coronavirus thing, then you can basically skip right past line 8, 9, 10, and 11 and go right down to line 12. Now, you can look on the instructions on line 12 because it's, if you want to, but it says enter the amount, if any, from worksheet 2 in the instructions. This is your income for prior years from other than IRA retirement plan accounts and qualified disaster distributions. Well, in this case, the prior year amount was simply $30,000. It says add lines 11 and 12. This is your total income this year from other than IRA retirement plans or qualified disaster distributions. Normally, we would all pay tax now on $30,000, but I'm going to include a repayment, and we're going to talk about that here in just a second. So the total tax this taxpayer would be subject to in this instance would be $20,000. But that's only because they made a repayment. Most people, if you're like most people, you did not make any repayment and you do not plan to make any repayments. So if you had $30,000 to report, you would be taxed on $30,000 in additional income this year for your tax return in 2021. And that is as simple as it gets. I mean, that's essentially how it works. I want to take a moment to say, if you are finding this video helpful, if you could just do me a quick favor and tap the like button, it really helps out my channel and helps spread the reach of this video over YouTube so people can actually see it. So thank you so much. Now, when it comes to making repayments and when and where to report those repayments, it's a little hairier, and I wish they would have made this a little bit more streamlined. But if you, for example, wanted to make a repayment that would reduce the amount of income you have to report on your 2021 return, you would need to do that before you file your 2021 return, preferably before the due date, which is April 15th or April 18th this year, or whatever it is. But that's what you would need to do. So if you did it before you filed your 2021 return, you could report, like in this example, the $10,000 directly on the form for 2021. But what happens if you file your return and then later make a repayment? So let's look at a couple examples the IRS gives within the instructions. All right, I'm just going to talk to you guys about these different examples. I'm not going to read them to you on screen because that's boring as hell, quite frankly, and nobody likes that. Okay, in the first example though, the overall premise is, let's say that you file your 2021 tax return, and of course we're in year 2022, and later on, after October 15th, which is the extension deadline for filing your individual return, you decide to make a repayment in November of this year. So in November of 2022, you decide to pay some of this back. So what happens? Well, since your tax return is already filed and it's beyond the extension deadline date of October 15th, what you would have to do if you make a repayment in November of this year is you would have to decide if you want to amend your 2020 return or amend your 2021 return. If you wait to pay things back after the final due dates of your return and extensions, then likely you're going to have to amend, or you can carry forward, which we're going to talk about in the next example. Okay, similar scenario, but in this example, instead of just paying $10,000 back, let's say you pay $40,000 back, and your total distribution that you were supposed to report for this year was only $30,000. What that means is you would have paid more than what you were going to have to report this year. So you have $10,000 in excess. So if you're making a really large repayment, what do you do? And let's just say, once again, you make that payment in November of this year, after the due dates and after the extension deadline. So how do you treat that excess $10,000? The excess $10,000, you can carry it back to a previous year, like 2020 or 2021, or you can carry it forward into tax year 2022. It's up to you. It's whatever makes the most sense for you. And I would say lean on whatever year you had the most income in or expect to have the most income in. The last example is if you're someone who decided to elect to pay all the tax in 2020 and report all the income that year, and then in 2021, you decide, well, I really just want to repay all of that back because I shouldn't have taken that distribution. What you can do is you can repay all that back, and you would just need to go back and amend a previous year return. But follow the instructions. There's examples in there. They don't make it crystal clear, but if you read through some of the examples, it makes a little bit more sense. But that's essentially what you would have to do. All right, guys, that was the quick lowdown on this stuff. I know it was a very quick overview. Make sure you check the instructions if you have any confusion. Hopefully you can see that reporting this is not quite as difficult as you might have originally thought, which is unusual when it comes to taxes. Usually things are more complicated. Leave your questions, comments below, and I will do my best to get back to all of you. And for more videos on taxes, business, and money, make sure you're subscribed to my channel. That is the best way to follow new updates and new information such as this. All right, everybody, you've been a wonderful audience as always. Take care, and I'll see you in the next video.